Good morning. Enzo DiCostanzo, Clinical Professor of Economics and Finance, St. Peter's University, Jersey City, New Jersey. It's March 24th, 2019, and this is the next topic for the online section and some supplemental stuff for the live sessions. And I think we covered some of this early on in the January, February. For some of the sections we covered completing the accounting cycle, and that's what we're going to do today. So let's get to our spreadsheets and get going. Okay, folks, here we are completing the accounting cycle, and here's some of the objectives. Yeah, actually, here's the. I didn't set this up, but just very quickly. There we go. Yeah, for the folks for the online sections, you got to be aware. In class, I'm saying it all the time, and I think people always hear me. But when you get to the spreadsheet, number one, you want to use the arrow keys because these models go on and on and on. Okay, so that's just something to keep in mind. It's not just 8 columns. It goes substantially to your right. So use the arrow keys, and you hit Control Page Up, or Control Page Up, Control Page. You see how it's toggling among all the tabs. So here's MPV, here's completing the accounting cycle, here's the assignment for number 1. So I'm getting emails, and people seem a little confused as to where to find everything. You have to be able to move around or just click on it, right? That's another way. You have to be able to move around these spreadsheets. It's not just one tab or a few columns. I'm showing you the real way that this happens, and it's substantial, and it's long, and it's complicated. So just keep those things in mind, that it's not, it's not something that takes 5 minutes. The dean, the chair people, they wanted you to have, I can't believe it at this point. It's almost a decade ago that I started at St. Peter's, and all the people in charge want you to have a real vision or a real experience as to what this looks like if you do this, in investment banking or investment management or something, some serious big league, New York business venture, and that's what I'm showing you how to do all these things. So we're going to use Pioneer Advertising as our first example, and there's going to be we'll show you trial balances. Now, if you look in the textbook, this is chapter 4, and there's a bunch of other chapters that came before it. But look, it's a finance course, and we want to do some good account. There's no finance without accounting. You have to understand entries and the balance sheet. That's where the data comes from. So you have to have a vocabulary that deals with that. And I was thinking about maybe maybe the third topic that we might deal with cash and bank reconciliation. So I think we're going to have time for that. So we'll spend a good amount of time on net present value for the online section. We'll spend about 2 weeks on the accounting cycle, and then 2 or 3 weeks on net present value, maybe 3 weeks, 3.5 weeks. Accounting, maybe 2.5 weeks. And then maybe some bank reconciliation, book reconciliation type examples, which I think are really good things to learn. So for today's discussion, and it'll certainly be an hour, if not a little bit more, prepare a worksheet, describe the process of closing the books, describe the content and purpose of a post-closing trial balance, state the required steps in the accounting cycle, explain the approach to preparing correcting entries, identify the sections of the classified balance sheet. It's all this stuff. And like I said, you guys should certainly, hopefully, the next chapter for the online section, read the accounting cycle, as quickly as possible, because that's very important. And there's examples in here that started previously in previous chapters, but I'll get you up to speed with all of that. Okay, so it was just sort of flipping through this, worksheet, and actually I have the paper copy of the book, and it's like if you've ever seen it, it's a plastic page where every time you turn the page, you sort of add these numbers to it, which is really interesting. That's the old sort of way to do it. But I have the textbook, and you can see this is XLS is Excel, and they're using and this textbook was published about 10 years ago. I used it when I was at Rutgers, and I'm still using it with you guys because it hasn't changed. So trial balance on the worksheet, adjustment data, adjusted balances, then extend to the actual financial statement. So we're going to do it all in one chapter. But again, it's a course, and especially the online folks, it's a course where we want you to spend the time on net present value. We want to spend the time on completing the accounting cycle. Hopefully, we'll spend the time on the cash transactions and go through how to deal with deposits and trans and outstanding checks. That's all very real stuff. Okay, so we want it to be where you take the course and you're out in the world with something that's employable, an employable skill. Like I said, please read the chapters. And and I'm not trying to be sarcastic or terrible, but I'm just saying, and again, especially for the online folks, but all my students, you have to read the chapters. You have to go over the videos. Again, I've used some of the videos for the live sessions also, but you can't just run to the assignment and just try to get the assignment done and that's it. You have to read the material, and that's what we're trying to teach you. We're trying to teach you the basic skill of reading a chapter, building some of the models, getting some guidance with the videos. But that process, I'm teaching you that process. It's not just, hey, let's get the assignment done as fast as possible and that's it, kind of a thing. And that's some of the emails, I've done this for a very long time. It sort of comes through. That's all people are very interested in. Just, hey, just tell me the assignment and that's it. But you got to read that. That's why we're taking the time. I mean, we can do, if I did the course like that, it would just be an assignment a week and we would do 8 chapters and really not understand much. And I really don't want to do that. I want you to leave with an employable skill and a detailed skill, and to know that it doesn't take 30 seconds. It takes a while to work on all this stuff. The initial transactions are here, and I'll discuss those: investment in the company, how they got the cash number. Then there's going to be some adjustments, which are here, which on the next, which again, it's a little cut off, but I'll explain this on the spreadsheet as we go through a little bit. Some of the expenses, the adjusted trial balance, and then creating the financial statements. And now, again, the financial statements. But see, look at this. It's hard. There's no title here, so doing it electronically is certainly better. Whoops, I apologize. Yeah, doing and we'll go over down here. There's some very interesting programming down here that we'll discuss: net income and net losses, and how to account for all those kinds of things. We're going to go through this page. So much of this is on the spreadsheet, so I don't have to worry about it. Going over in detail too much here. Financial statements, a little bit more, revenues. And now, I'm working on the Home Depot financial statements in my live class and some of my intermediate classes. You have to realize something. See on the top here, it says service revenue. So many of the examples in the first 4, all the examples are just simply service revenue. An attorney, a doctor, or something like that, or some sort of marketing a service, though. It's not, stacks of plywood, stacks of roofing tile, stacks of tires somewhere. It's none of those kinds of things. So that's, that adds entries to your accounting. It adds inventory to the balance sheet. So as the business that you're looking at changes, all these, they're generally the same, but they're identical. So, you have to realize that some of that is coming your way. So certainly it's something to be ready and be aware of. The equity statement. Now, when you do these for real, anybody who's read SEC documents or 10Ks, you have to understand, especially if you work for a law firm, you have to understand those types of documents, and they don't come with anybody explaining the entries. So you've got to go in knowing a basis for reading about know the basics of reading a balance sheet, and then expand it to whatever it is that you're working on. It's no joke, and all these skills are golden. These are all golden skills that we want you. That's what we want you to have as we're getting to the course and the material. There's some specific problems closing the books, and we'll get to all this stuff. Like I said, this is all explained, the closing entries and how to deal with those. We'll explain all this as we go through the chapter. The ledger. We're going to go over everything. All this stuff is, like I said, I'm just flipping through it so you guys you see it before your eyes. The balance sheet here, a little bit more detailed, a little broken up into a couple more different pieces. Long-term investments, now intangible assets, current liabilities, long-term liabilities. So again, we've expanded this accounting equation, which is the first couple chapters. And again, I'll explain everything. I'm not one of these people who says, oh, well, you should have learned this in some other course, and I'm not that way. I think it's my responsibility to show you everything you need to know for the things that we're discussing. Sure, it's helpful if you have background in this and you understand it a little bit better than someone who's this is the first time. But so many of you, most likely, this is the first time that you're seeing these types of topics. Like I said, I take that into account. I never put it on you and say, oh well, what would be the point of that? Say, oh well, you should have learned this in some other course. You can't take a time machine and time travel back to whatever course you should have taken before, kind of a thing. You can't really do that. So I mean, I'm left with the situation that's in front of me, and that's to teach you guys, everything you need to know about all the entries and all the stuff that we need to know. We're going to go over that. So be at peace with that. That I'm not going to say, oh well, you should have done this, you should have done that. That's, I don't, I don't know. There's people like that, but I'm not that way. What the operating cycle is, and like I said, these are just, as you'll see, as you read deeper into the book, these texts, which I hope you do, it starts to break apart what you learned into more pieces, where the beginning couple chapters go over sort of everything, and then there's just a chapter on receivables, just a chapter on plant, property, and equipment, just a chapter on shareholder equity, just a chapter on cash flows. So all the things that we learned sort of initially, there's more detail, and hopefully you'll see, you'll go quick, you'll go through that material quicker if you really learn the basics. And I learned that very early on. A classmate of mine, I miss a good friend of mine, said to me, I remember we were near graduating, or I don't know, maybe it was in college, even like during our college years, even though we went to different colleges. He said something to me about, we were talking about computer science, and he said, if you learn, there was some magazine that he was reading, and he says, if you learned everything in those magazines, you know a hell of a lot. And that's something that stuck in my mind for a very long time. Must have been 30 years ago, probably, or something, that he said something. And I've lost touch with him, unfortunately. But, I remember that, in his mother's apartment, he said, we were just, both of us were in college, starting our careers. And I remember he told me that. And it stuck with me all those years. But it's true. It's very true. You learn the basics. And you hear it in baseball. I'm a big baseball guy. I'm always watching baseball games, and you're good at throwing and running, and not overcomplicating things a bit. It's going to do nothing but help you. So yeah, Watson. We're going to get to the Watson problem in a little bit also, but that's going to be another video. That's not going to be this video. So okay, we're here. You got the online section. You guys have this. And here's some of the objectives: closing the books, preparing the worksheet, the purpose of the post-closing trial balance, the accounting cycle, correcting entries, the classified balance sheet, all those different pieces. And folks, I apologize whenever I see that extra space sort of lingering around. I never like that. So yeah, I cut and paste some stuff every so often, and you miss sort of what to do. Okay, like I said, those are your objectives. We define the work. Like I said, you guys can. I'm not going to just read this to you. You guys can read through all of this stuff. The procedures for worksheet, and what and adjustment data, adjusted balances. Prepare trial balance on the worksheet. And the goal being to develop an income statement and develop a balance sheet. Okay, those are the goals. Now, how this all started, and actually what I'm going to do, I'm probably going to, because I was looking at this last night. I was going to work on this yesterday, but we're going to work on it now. There's an initial set of transactions, which are here, and I'm using the legal term, the whole fact pattern terminology. And let me just put it right there. Will that work? There, that's a little bit better. Yeah, this is what started the business. All of this, okay. This is what started it. So you're here. These are your class notes. You're right here with this. And again, I'm always trying to make this, 140, 150. I think you guys can see that stuff a little bit better if we make it a little bit bigger. These were your initial transactions. And hit escape to get out of your highlight there. And this doesn't need to be 130. This needs to be a little smaller. Completing it here. So yeah, like I said, so if you guys don't mind, I'm just going to make sure that we don't make any mistakes. We're using my sort of notes from when I worked this stuff out in the past. But here, before you even start doing that, let's just sort of look at what we're doing. This is the initial trial balance, and if you notice, I have all the account numbers right next to it. I have the labels of the accounts, and what's debit, what's credit, and it's funny. I had another accounting professor. I'm in the finance economics department. I do a lot of accounting work in my courses. I had a professor come up to a young guy, and he says, "Oh, he goes, your students are telling me this and telling me that, which is good. I'm happy with that. I'm not, that's not bothering me at all. But I like to think I exhaustively go over these what a debit is, what a credit is. Debit and credit is accounting for left and right. It's really it's nothing more than that. Okay, it's experience and just practicing the entries. When money comes into cash, right? Debit. When it comes out, credit. right? And that kind of a thing. So you have to learn, what goes in and what goes out, and how you designate. But that's just experience and practice. It's really nothing more than that. We want to construct this. So we're here with this. So it says October 1st, there was a $10,000 investment. So again, there's more to it than what I'm explaining right now, but this is just to give you guys some sort of background on that. There's 10,000 in capital there. Okay, that's 10,000. Then you have, now here, I'm going to do this like this, equals 10,000, 1, 2, 3. Okay, and actually what we'll do is Alt-H-F, make that black font because we're just putting a formula in there. That's the first thing that happened, right? Debited cash, credited owner's capital. Then there was a note where you use a credit instrument to purchase equipment for 5,000. Okay, so you have 5,000 in equipment, and then you have a note payable next of 5,000. And we'll just do everything sort of in the trial balance. And here, let me just go back to those first two entries. Right? Does that make sense? Right? You bought some equipment, 5,000, the note payable to 5,000, capital, somebody invested in the business, and it showed up as cash on the balance sheet. Okay? That's what you need to do with that. Third one, it receives a cash advance. Okay, so that's a liability. So you look for unearned service revenue, which is right there. Those are liabilities. 1,200. Yeah, right there, 1,200. Okay, and then that comes into cash. So what I'm going to do is say plus 1,200. Okay, or I could even be more sophisticated than that. I can take this thing, right, and I can take this. Right, I can do all that. Same thing. And I'm just showing you now. Look, I'm doing this like the shorthand way of doing it, but the real way is make a journal, ledger, and then you summarize your trial balance from the ledger. But we're just, like I said, I'm not saying, oh, well, you should have had that someplace else, but, we're not going into all of that detail. I want to show you adjustments and all those kinds of things. But I'm just, like I said, I'm showing you sort of a way to do this so you have a little bit of experience. But, it's by no means an accounting course, at all. This is a finance course, and the idea is any finance course is evaluation. That's really the point of it. So, that's what we're trying to do. Pays rent, 900. There's your 900, which is what. So what you'll do is you recognize the rent expense. Now you paid the thing. You're going to subtract that 900 from cash. And we're trying to show you, at the end of the day, to get that number. Okay, at the end of that, that's what I'm trying to show you. But like I said, we're still working on that. And actually, down at the bottom here, what are we doing here? I don't think we have utilities. Yeah, at one time I was sort of working like this and saying equal sum parenthesis. I'm just sort of working this way. Right? I put these zeros in at the bottom to get the underlines. I've stopped working like that, but it'll work for what we're trying to do. These are just summations of the debits, summations of the credits. Like I said, we're trying to get to those numbers. And like I said, this was in a previous chapter, so this problem sort of spills over from something else, from another chapter. But I'm saying once we get this, then we're off and running. Just concentrating on chapter 4. But I'm just sort of getting up to speed, sort of the quicker version of how this is all built. It's 600 for prepaid insurance. And again, you come up here and you're crediting, you're minusing or subtracting 600, which was that. Okay. Advertising materials, 2,500. And this is on account, which I think is just simply 20. This is just from here. I should say equals the 2,500. Came from there. Okay, we did that one. And see that everything's balancing as we're doing this, because everything's going in the right places as we do this. I know I'm doing this a little quickly, but like I said, there was some. I'd hope that you had some accounting somewhere. But like I said, even if you didn't, you could watch, folks. There's no, we're not licensing these videos. You could watch it, 10 times if you want. Or I was gonna say 50 times. A realistic number. You could watch these videos several times. Okay, and I think I recommend that you do, because, like I said, we're trying to limit the number of chapters just to give you a depth of knowledge. Okay, and I hope that's working. Yeah, this is a good one. This next one. It hires 4 people. Um, they begin work on the 15th. And of course, the transaction doesn't occur until the employees are paid. I don't think, yeah, okay. Yeah, you recognize that expense. It looks like you're recognizing that expense, but yeah, I'm saying if they're not paid, it's a payable, but that's got to come out of the cash, right? Because this is at the end. So if they're hired on the 15th and their payments are made on the 26th, so yeah, this comes out of cash. So you hire 4 people, 5-day work week, $500 per person for 4 days, pay them every 2 weeks. So we did all the math here, and this, this computation was happening in my driveway a few months ago. I had my roof installed over the winter, which is probably not the smartest thing to do, but you should do it in the spring. But I did it in the winter, and it's not one person when that happens. It's a couple of people that show up to work on this for you, and I deal with a broker who hires. I don't deal with hiring a roof guy and a door guy and a plumber. And I go to one person. It's good. He hires everybody. It's a good model. And this is a guy who's running. He's run every day of the week plus Saturday plus half a day on Sunday sometimes. He's working all week long. And because there's a demand. I mean, if you need a plumber, and then if you don't need the plumber, right, they're sitting there. And I know there's a local plumbing place that I don't use them anymore, but I've used them. At one time they were 24 hours. Now they're not 24 hours, and they reduced their service area because if you don't need a plumber, right, they're sort of just sitting there. But this guy who's a broker, if you need a roof, he'll deal with that. A door, he'll deal with that. Plumbing, he'll deal with that. Painting, he'll get concrete, he'll whatever it is. And so he's not saying I don't do this and that kind of a thing. That's, I have several relatives who started businesses or inherited businesses, probably the better word. And I saw how they would, and this early on, like, 20 years ago, 30 years ago, they started some business, and I could see one of them, it was an auto shop up in Sussex County. He didn't do this, he didn't do that, and he would send customers away. And, I don't know. I mean, like I said, you should figure it out. How to do things, reasonably with reasonable quality. You're not, Henry Ford. I didn't say that to him at the time, but maybe I should, because I think he lost his business or business closed or something. So, but just things to think about. You want to, if you can generally do something, you should do it. So the expenses, we're doing all the work here equals 4 times 2 times 500. All right, all that. Anytime it's a computation, you want to make a black font, and this came out of, so you're seeing all the debits and the credits sort of happening at one time. Okay, so it came out of the cash, it recognizes an expense. Okay, we did all those. So here, you're looking at this, and here's the cash number. What came in? 10,000 came in, 1,200 came in, and then 3 numbers came out: insurance, salary, wage, rent, expense, all that stuff came out. We're still balanced, mind you. Okay, we're still balanced, which is good. Okay. The next piece of this, supplies, yeah, salary and wages, 500 withdrawn. So the drawings are, this is like an expense, 500, and then you balance it up here minus that 500. That's just share repurchase, some cash that's available to the shareholder is really what that is. We're still at the same numbers down there. Yeah, so it owes them and pays them that we have. And then the final, to get us, we're going to be good. To get us to the final thing here, it says a service was provided, 10,000. And the happiest thing that happens to these companies is they get paid, immediately. There's your 2,700. All these transactions were from previous chapters. I think chapter 2. All this stuff came out. So there you go. That's your initial trial balance. And I know I rolled through that a little bit quickly, but that's what this looks like. Okay, so like I said, you can rewind the video, and I just listen to me rewind the video. I'm still, you guys, I'm certainly dating myself, but at one time, I'll quickly try to find this for you guys. Where is it? Where is it? Where is it? Yeah, there you go. There it is. These were VHS. This was the memory medium in the 80s, and this is a great picture of it where the tape is old. That didn't happen too often, but obviously you're dealing with a big plastic thing. It was as big as your hand, the size, and maybe even a little bit bigger than your hand. And you would put this uh, in a machine. There's a video VHS cassette recorder. It wasn't a disc and then laser discs came out, and you had a big thing like this, right? You stored these things and you stacked them, and they took a lot of space. So, but that was the technology of the day. But we've moved at lightning fast pace in the world. That's amazing. How much things have progressed, and now you guys, the folks in class, you're listening to music on your little phone, and it's a file on your phone, and that's all you know about it. But at one time, we would go to, like, there were stores where they would sell the music in the store. There's actually like a record store and a tape store and a video store, and you'd come home with a record or a little a musical cassette or a video cassette or something. You'd come home with that. You have to physically go buy those and not just download it. So the world is changed. I'm saying that so many people have not even any experience with stuff like that, but that was what the world looked like a couple decades ago. So anyway, so it's an advertising agency. They're providing advertising services, and I know one of the girls in the class, Amanda, Amanda very well. She's doing something similar to this, and very successful, I could see, and the sky's the limit, I think, for her. She's going to do very well, and but yeah, so they're providing, and this, folks, this is a real thing. Pepsi-Cola, and look, they hire these chemists to make the Pepsi and the Coke and all these and the different foods and the chips. They hire these chemists to do all that, but the business is survive, is made and broken on communicating and getting the word out there. That's how the business. That's what happens with the business. And the woman who runs PepsiCo and Nadine reminds you of this kind of a woman where very good communication skills and can get out there, get the word out there, and really work hard and at communicating the right message. And I'll tell you, the tactical crowd, and I consider myself a part of the tactical crowd, so I'm saying this about myself, but our background, it doesn't hold that to the magnitude that it should, because communicating the right ideas are very important. And there wouldn't be a PepsiCo, there wouldn't be a Coke if these ideas weren't communicated. Folks, I think anybody can make a sweet soda that's got a nice color to it. If you go to the inner city, sometimes these like little corner stores, they have all sorts of sodas that most Americans never heard of, and different brands that you never heard of, or it could be brands from overseas somewhere that aren't Coke or Pepsi or Dr. Pepper or something like that. And and why aren't they some of the biggest companies in the world? Because the message wasn't communicated, in a way that resonated with people. I don't want to say the right or the wrong way, but it's the way that resonates with people. So anyhow, so here's the trial balance. Okay, so these are all transactions, and we fill these all in, and you have all that. Okay, and now what you should do to deal with the chapter material, you have your initial trial balance here. What you're going to do, you'll clear out Alt HHN. You're going to clear out all these entries. This is what we just did. Okay, so you're going to arrow over. You're going to click on cash. 15,200. Yeah, there's not. And now if there's nothing for something, just leave it. Prepaid insurance with 600. Equipment 5,000. And the right columns. Credit. Payable 5,000. Account payable 2,500. Unearned service revenue 1,200. Owner's capital 10,000. Owner's drawings 500. And finally, service revenue gets a credit 10,000. And then you have a couple expenses. Yeah, and what happens is there's going to be something called adjustment, where, and we'll explain it, but not that these expenses, not that the expenses down here are different, but these entries didn't initially appear, and you had to recognize them eventually. That's probably the better way to say it. Salary and wages, 400. Rent expense, 900. And all these, we're going to make this all the font in this black. Yeah, I think that's all. And the way to test that, or the way to make sure, yeah, because for utilities is 0. Yeah, let's make sure. All right, you're here with this, which is totals equals sum parenthesis. You know, you can be conservative and not mess with. Yeah, there's something, a couple missing here. You can be conservative and not mess with, you know, having too many spaces in here. Yeah, the 28,700 is okay. I think here we're missing something. There's something we're missing. What are we missing here? 4, 9, 5. Supplies. Yeah, supplies. We got a supplies number. Yeah, it says supplies here, or that we're using supplies. Let's see what happens with that. 6. Yeah. It says 2,500, but I don't recall. Did we have supplies in here? Oh, we did. Okay. And payables. Okay. So either we just maybe just didn't type it in. I think. Yeah, we missed. Yeah, because we have it here for payables. Well, this is office equipment. Equipment's not supplies. Oh yeah, here it is. Okay, folks. That's yeah, but these things added up. Oh, I see what happened. 2,500. Yeah, we had it in the wrong spot. There's good error detection. Yeah, you got to be careful with that. So I apologize for that. It was supplies for advertising, but it's got to go under supplies. See, this is why it's good that we check and all this. It's extremely important to be able to do all that. I was searching down here for advertising expense, which we don't see. Yeah, it's right here. Equals. There we go. Now it's going to match. Yep. Okay. So yeah, like so all of us. I'm very experienced with this, and I you know misplaced the ball just there myself. Okay. So for the worksheet version, that's what the trial balance looks like. And we have some other number here that we need to deal with. So this is 5,000, 1,200, 10, 10. All right, we have all those. And again, let's just check. Yeah, payables. Yeah, payables here. F2, so somewhere we're off a bit. Yeah, that's the payables. Oh, I see what happened. Okay, because we're referring to this, and that's 0 now. So yeah, so when you made that change, so this equals that 2,500. There we go. Counts here 20,700, and there we go. Okay, like I said, so when you move stuff around, you got to be careful. Here, the problem was I recognize supply expenses as an advertising expense and as opposed to supplies. So, like I said, you got to be careful, and you always got to fixture your entries. Okay, so we're here, we're good, we're solid. Okay, we have everything balances. It balances here, it balances in the previous, you know, the sort of the initial version of this. Everything balances at 28, so we're okay. Okay, but again, that's and they see that's the thing where we're just sort of not rushing, but we didn't work on the detail of this, and that it's good that all happened because it makes you realize you can't do things without journals, you can't do things without ledgers. You know, those methodical steps in accounting just, you know, showed why they were so valuable. Okay, like I said, the point of this chapter is to go over the worksheet, not to go over how to we get the trial balance. I'm just throwing it in there, but you can't just do it off the back of the envelope. You got to be able to sit down, journal, ledger, trial balance, make adjustments, adjust the trial balance. You have to go through all the steps. There's no shortcutting it. Okay. But what you did learn just now, I hope, is you got your sense of your initial you got your sense of your initial reading the transactions, making accounting entries type thing. Because what's next is this adjusted trial balance, which we're going to work on right now, and we're going to do this sort of the accounting way. Here's adjusting entries, and if you look at it, it's already sort of set up for you. Yeah, we're going to look. We have 2,500 of supplies. It says it debits additional account. It says supplies. Now it used 1,500 of supplies. Well, we had 2,500. We were just messing with that entry. What's left, kind of a thing. You write down an insurance expense from your prepaid numbers. You recognize the depreciation. You have some unearned service revenue where you're recognizing that you're writing that liability down just a bit. You have a receivable that some money sort of comes in, type of thing. If you did some transactions where there's a receivable somewhere and someone owes you, and actually this one doesn't have that. So what is this one? This would be, yeah. So actually here, this is their first a receivable is. And it depends. Another person's payable is a different party's receivable. All transactions, it's not unilateral. They'll have two pieces. There's always two parties. So if there's a receivable, someone's owing somebody and someone's getting a service and someone's owing somebody else money type thing. Okay, so that's what we're looking at here. We have some debt that we took out that we're going to recognize the interest on. And actually, if you go back to this, we want to do the math on this and just make sure. So this equals 5,000 times parenthesis 3, not 3. It's 12 over 100. Okay. And then times 1 month over the 12. Yeah, because it's 12% for the year. That's 12 over 100 is 12% for the year. And then 1/12 is just 1 month. And we wanted to make sure, yeah, that it's 50. And it is. Yeah. Okay, so that's at 50 that you're going to. So again, it's going to be brought in the initial transactions here. This is just simply this: 12% for a year, but you're only dealing with 3 months, so it's basically 1% a month. And then one of those 12 months type thing will give you $50. And we have that coming, which is here. And then, yeah, if you look at the number here, you're paying 4 people $500 a week. That's 2,000, right? So per day, that's 400 a day, right? Because there's 5 people. That's 400. So then this is a 3-day. This is 3 days. 3 days. And then there's yeah, it's that 3 days. Yeah, 5 people. No, 4 people. Yeah, because it's 4 people. It's 100 a day per person. Let's go back and make sure. Oh, yeah, 4 employees. Weekly, yeah, it's 500. Right, exactly. So looking at each weekly salary 500, so it's 100 a day, 5 days, per week kind of a thing. So or 500 per day. I'm 100 per day for 5 days, and then times 4 people. So, and then times 2 weeks. So yeah, again, always check all that stuff. Right, this is right. That's how you get the 1,200. 3 times 400. Right. Okay. So we're gonna hit these. So these are it's a similar thing. These are all of your adjustments. So it's with a supply expense, you're just typing in 1,500. And the math is done in the sheet, is really what it is. That math is really done in the sheet. Here's the next one, old HHN. This would be the insurance expense is it's simply 50. Actually, even a better way, equals 600 by 12. Okay, which is just simply that. Depreciation is whatever the agreed upon number is, or whatever your jurisdiction is for FASB. 40, right? That's whatever your account tells you is your depreciation number. This is you're writing down this liability, and you're recognizing legitimate revenue, or you're recognizing revenue that occurs, and then you do a receivable where you provide some services and that they owe you, right? That kind of a thing. Now, if you look at this, this is all generally compartmentalized, and we're going to keep sort of rolling down. But if you notice here, I have two lighter shaded areas here. All that is really trying to show you is that in the next, you see, we're stopping our work in October 32nd, but just to show you sort of what happens. In the next year type thing, you can have yeah, in the next year, you're going to see, you're going to collect the 200 from the receivable. We'll show you in terms of the cash for the payroll that those 3 days plus 8 more, no, 7 more, right? Yeah, because it's 400, right? So this is 400 a day, 4 people, 100 a day, 400 a day type thing. That's how you get the 2,000 at the end of the week. It's 7 days times 400. Okay, if we did the math here, 7 times, and this is 3 times 400. We're going to show you sort of, the next payroll date that comes due. We'll show you how to do the math in that. Okay, so, all right. So actually here, just showing you, you collect the cash. That's not a part of. I'm just showing you sort of what happens. That's not a part of our records now. Interest expense. We just worked out the math on that. 5,000, 12% type thing equals 5,000 times 12% times 1 divided by 12. Which is that. Yeah, this is simply a payable, is what this is. So yeah, this is the 3 days equals 3 times 400 a day. Okay, that's all that is. And now what happens is you have your payable here, which you're equaling that, and then you say equal the if 2 weeks, right? 5 days and 5 days is 10. So this is going to be 7 times the 400. That's how you get your 28, and then your whole cash payment to these guys has got to be 4,000, which is what we computed initially, but it's broken over 2 accounting periods: the October accounting period, the November accounting period. But see, look at the date. That's November 9th, and we're not dealing. We're not accounting for that. I'm just showing you sort of what happens. We're not accounting for that right now. So, like I said, so I'm going to leave those sort of grayed out. I'm just showing you, how these things evolve. But the next piece of this is, see where it says adjustments? Now, you did the hard work. The hard work is pretty much done. Old HHN, just clear that out. Let's see. Yeah, the next piece of this. We're looking here. 1,500 supply expense. Let's find that. Yeah, supply expense right there. 1,500 is right there. And what you do is you're going to write down supplies by 1,500. And just to show you sort of what happens eventually, looking at this, this is going to show up here. This is going to be equal to 2,500 minus that 1,500. That's 1,000. That's what's left in supplies. Okay. That's how that's going to work. All right, so I'm saying you recognize that you wrote down that supply, but right, you recognize the supply expense. These are insurance expenses. We did the math, 50, and you're writing down prepaid by 50, and how you're adjusting is you're going to again come to debit. You have 600, subtract out that 50. That's 550. See how that's working? Okay. Accumulated again, this is depreciation expense, which is here, which is 40, and your contra account, because now what happens is you're never going to write down equipment or land. You're never going to write that stuff because you bought equipment for X dollars. You're not really writing that down in the account that you're listing it in. What you're doing is you're saying, okay, we're going to depreciate this equipment by $40 a month or whatever it may be. That's in a separate account, and it shows. So what you're trying to do is you're trying not to obscure what you initially spent for the equipment, because you're constantly depreciating it. So you're saying here's what we spent, and then here's what we're depreciating it as. Okay, so you're separating those so it's obvious what your capital is. So it shows you're investing in your business. The reason that is one of the main sort of criteria for investing in a business is, are they investing in, for money to capital come into a business, what are they doing with my capital type of a question. And that's a big piece of things. The finance book has that, the economics, all those textbooks have substantial discussions on investment, and not investment of not where we mean speculating on stocks. Investment means a marketing campaign, hiring intellectual talent, building a factory somewhere, investing in the business. However you define investing in a business, that's what what we mean by that. I'm just making I'm just etching out the space a bit. So okay, that was appreciation. We're going to recognize a service revenue, a new service revenue piece here, and that's right there, 400. So you come here, and the normal balance for service revenue is credit, right? You're right there, 10,400. So make sure. Yeah, folks, I apologize. This is my yeah. I think we're adding a bit more to that too. So these aren't finished. You have 1,550. Yeah, 1,550. But like I said, these are a little more. There's more to it. It's not just these are running totals. We're going to keep adding to these. So there was a service revenue which was there. You recognize that, and then the unearned got written down a bit. So you're here. This is 400, right? So this, which has a normal balance of 1,200. Subtract out the 400, which is a debit. So you have to sort of turn your brains a little bit on that one. Yeah, 800 on that. Okay, but that's how that works. So you have these liabilities, and you subtract out the debit. Okay. All right. Alt HHN, again, just etching out a little bit of space here as we work. Okay, we looked at that one. What's next? Receivables, again, there's that other 200. So now you recognize the receivables, which is where? Should be up here, but there it is. 200, right? 200. And then your revenue gets recognized with that. So it's plus this 200. Okay, which is how you have the 10,006 for revenue, and there's your 10,006. Yeah, I did it the same way. I did it the same way. Yeah, so here's 200 here. Oh, and actually, what I needed to do was just say down 200. Yeah. Okay, you got to be careful. Another revenue entry. So yeah, I pulled it off of here. I should have just got it from there. Yeah, much better. Okay, so everything's balancing. Yeah, and actually, I didn't put the totals down here, but let me do that. So we're just making sure what we're doing here. It's just totals here. So equals sum. All these, comma, all those, and then right. There it is. Okay. Yeah. All right. So again, as we're going along and make sure what we're doing here that we're okay. All the debits added up. And actually, probably what I should have done in here also, comma, these two, right? Either there's nothing in there yet, but there probably will be pretty soon. Okay, we have the 200s. This does not get accounted for because we're in October, not November. Interest expense 50. And how did we do that? That was 50 and payable. Yeah, so we just recognized it. Yeah, we just recognized it. Yeah, we didn't pay it out. So this will always be here for an expense. Either it gets paid out, or this is cash and you credit cash, or you recognize that you owe. Okay, which is that one. And you can see we're still balancing here. What's next? Salary wage 1200. Expense 1200. And that's a payable. Yeah. So you're gonna, oh yeah, you because the period ended, but you're not gonna write a check for 3 days, so you owe that 100. And there you go. Everything balances. And yeah, 3,440. Yeah, 3,440. Okay, so you go through all this, that's just, I like the shading because it keeps your focus on where you're working. That's what I like about that. Okay, so you did all those adjustments, and now what you're going to do is if you didn't make any adjustments, you just bring over all these numbers. These all have adjustments. The equipment, you didn't buy any new equipment. You didn't alter your debt profile. Accounts payable stayed what it was. Here's your owner's capital, 500. Take care of all those. And actually, what we should do also again with this is yeah, another set of totals. So copy. Yeah. And we have nothing, yeah, there's nothing down there. Okay. And yeah, there's actually with this one, yeah. So copy, drop it in, paste. Same one. And there's nothing in between, so we have to worry about this. This would be 4,000 plus 1,200. Yeah, 52. The 9. Okay. There was now. I'm saying we did sort of the adjustments is the work. Okay, the adjustments are the work. And there you go, 30,190. Yeah. Okay, there's your adjusted trial balance. Okay. And now what you could do, you know, I already showed you how to. This is the original trial balance. This is the adjusted. We could sort of go through the whole set of steps again with this, one way or another. Um, but you already have this, and I'm looking. Just want to see what I did here. Trial balance. Yeah, I think I just entered for whatever reason. I just entered the numbers, but we just did this. Okay, we just did this. So yeah, we could always go back to it later or something. But there it is. And actually, what we'll do, since we did the work, let's just do it like this: equals. It's gonna take a few minutes to do all this. Let's do it. Measure 200. I should have put this in a little bit of a better spot. Supplies it down to 1,000. Just a way to list it. The prepaid insurance gets written down a bit. And is next. Accumulated is here 40. Your note payable is 5,000. Yeah, we did that. Account payable. Still 2,500. Unearned service revenue is a liability. Right, salary wage, just another type of liability. $1,200. See where we're going with this? Interest payable. $50. Capital. $10,000. Drawings 500. Service revenue 10,600. All right. You can do all the expenses. So what we'll do, just as we're sitting here, Alt HFC, return, make that all black font. This was, we skipped a line, so equals sum parenthesis for your expenses. Yeah, I'm saying not going to be equal just yet, but yeah. So interest expense, this is 0 here. It's 50. There's a rental 900 and salary expense 52. Yeah, the payable was the other one. Yeah, 52. Insurance expense. $50. There's two, yeah. There's still looking at these last two. Depreciation is 40. And here's your supply number. Right. Okay. Yeah. 30,190. Yeah, it has 190. So yeah. So folks, that was a little on the repetitive side, but we have the thing to fill it in, so we did it. And actually here, this shows all the accounts that you're using, where it says chart of accounts. This is all the accounts that you're using. Okay. Like I said, it gets you used to, and what you do is you do something like this. I'm not going to do them all, but let's do a few. See, that's your precedence. And what you do, it shows you that you're accounting for everything. To do that, you go to formulas, and here it says trace precedence. It'll trace precedence, trace dependence, remove the arrows. It'll give you those auditing functions. Okay, formula auditing. Okay, it's going to help you. Save this work as you go. Okay. So we have the adjusting entries entered. We're going to close out in a little bit. I'll show you how to do the closeout with this. There's a ledger here. And actually, you know what we just did? We went up here and sort of picked off all of these from the adjusted trial balance. What we really should have done, because I'm looking here, there's also the ledger procedure here. We should have used that. And we may make that change. I may go back and make that change. Yeah. Okay. So how this works, and yeah, and journal one. What journal one really means is that initial journal. Those and journal one is just the initial trial balance. Okay, and some of them could be zero, just as well. Okay, so yeah, you can see here down with some of these, there is no J1 because you didn't have any of these initially. Maybe some of them you did, like these, the rent and the salary wage expense that you did. Okay, so that's down at the bottom here. So let's do our closeout here first. And I just want to peek at how I did this in the past. We're going to do this next. We're going to do that next. This is, yeah, I seem to have typed it in for better or worse. I could have just referred to the initial trial balance, which is probably what I should have done. Actually, the trial balance, yeah, we could type these in. We could sort of retype these, but we can refer to this. This is the money that came out of the capital account. This is the net income here. So yeah, this involves a little bit of sort of finishing off of things. So let's do that. Let's finish off of it. So we're here with this. Let's do the closeout next. With the yeah, because this will help us with some of the numbers. Okay, but the closeout, our revenue, it's 10,600, which you can find it right up there. And what I could do, I could just do this. Right, 10,600. Right, I could work. You're going to get a variety of ways of doing this. So this is equal. So the income summary is right there. Yeah. Okay. So now revenue, as you guys remember, revenues are generally credits, the normal balance, but we're debiting it So we close it out. So you zero it. McDonald's, they don't, if they sell a hamburger in January, they don't recount that same sale in April. And that's what we're looking at right now. Okay. And same thing with these expenses. Okay, these expenses are all credited. And again, you can just sort of write down the whole, go down the whole way here. Or you can do this. Equal. And we did all this. So equal supply expense, 1,500. Equal depreciation expense, 40. Equal insurance expense, 50. Equal salary and wage expense, 5,200. Let me just make sure. Yeah, the whole one, not just a partial. Rent expense, 900. Okay. All right. And then what you do on this other side is just sum them. I did that. This is my answer. So I just added those all up. So you come up here and say equal sum parenthesis. And like I said, folks, you got to be, I always want the details and why this and why that. I always want I always want to know that. Okay. And as I said this in class recently, what you're going to look at next here is the following. You're going to want to close now. Here, revenue 10,600. All the expenses about 8. So you're looking at a net income, not a net loss. So you're going to go to income summary. You'll take the income summary number from here, subtract the income summary number from here. All right, see those? It's Z105 minus Y108, return. And then that's what goes into, that's your net income. That's what goes into owner's capital. That's what goes into the bank account. It's that simple. Okay, and like you said, folks, if you understand the basics, you understand that, how everything functionally works in the first like 4 chapters, you really have a good basis for the rest of the book and the rest of accounting. So just keep that in mind. But again, the drawing, what's going to come out of the drawing is what we're going to look at next here. So with the drawing, we're going to subtract this is what we're going to do. So the drawing is normally debit, so we're crediting that. And I'm picking it off from up here, 500. And again, notice where it shows up. For a number for capital to come out of the owner's capital account, it's got to be debit, and we're zeroing out the drawing, and then we're saying we're subtracting from the owner's capital account. Okay, that's closings, and like I said, you can review that a couple different times. Here's the key here to close revenue income, and it says what to do. Okay, you guys can sort of look through that. Okay, and here let's try to figure this all out. The closing entries are J3. All right, you have that. J1 is adjusting. And yeah, you do have a J2. Where's the J2? Was the J2 the initial one? Here's J1, which is here. Yeah, you got to figure out where the J2 is. Sorry about that. There's not that many of them. Yeah, J2 should be the adjusting entries. Is what that, yeah, J1's the initial. Yeah, J2 should be adjusting. And these are closing. Yeah, I apologize here, folks. This is J2. Yeah, of course. I gotta change that in my original here. How'd that happen? Yeah, this is J2. J1 is just the original, which we don't have. But that's in previous chapters. So yeah, it's like I said, we're always tweaking this. So make those changes. Make those changes. And like I said, we're going to get to this ledger in a second. So closing the books, and there's all sorts of stuff you could read down here. So certainly spend some time reading that. There's some other, I don't think we're going to talk about Hancock today, but there's some other stuff here. But here, steps in the analyze of this transaction, journalize, post a ledger. Okay, so you have the whole algorithm here as to what to do. Very important, right? Very important. No. Example. Let's continue this, and then we'll fill in at the bottom. We'll fill in at the bottom as we need to. Okay. So again, cleaning up just a bit as we go along here. Yeah, we're gonna have an income statement. We're gonna have a couple. Now we're repeating a lot of this stuff up here. With income statements, you don't want to. Obviously there's no cash in there. So looking at this is going to be just the expenses. So go through just the revenue, and you've computed, your overall your accumulated revenue 10,600. Here's your expenses here 52,900, 1,500 insurance, 40. Okay, yeah, I think that's all of them. Okay, it's just your revenues and your expenses, and that's it. And what did we do with this thing? We did a couple maneuvers in here. We took all of that, added it up. Okay, we took all of this, added it up. Okay, we'll do that next. I'm just adding up the specific numbers. Even though there's just one, I'll still sum it. Now, these don't have to add up. You don't want them to. Okay, these don't have to add up. But here's what's going on here, though. We're going to use a control structure here, and this is something I remember every time I do this, that I get a lot of intense looks from everybody, because it's really programming at this point. And actually down here, these are just adding. Yeah, these are just simply adding. So let's set that up. All right, let's set that up. And obviously your expenses are less than your revenue, which you're happy about. Equals if parenthesis, whoops, parenthesis, space, parenthesis. If the revenue is bigger than expense, then revenue minus expense, which is profit, otherwise zero. All right, and look what happened here. All of a sudden you have a balance. That net income is the difference between the revenue and the expense. Okay, that's for a net income. But here, for net loss equals if, and you can't have any space here. You have to have a parenthesis. Now you can put a space. If expenses are bigger than revenue, right, then you take expense minus revenue, otherwise zero. That happens to be zero. Now watch. Let's just do this. Let's make this 20,000. Let's make sure this works. See? If you're 20,000, that's 9,400 net income. Revenue is not bigger than expenses. Expenses are bigger than revenue, and then this controls which side you put everything on. I hit Control Z to undo my last keystrokes. So this adds up net income and expenses. This adds up just zero plus the earnings, or the revenues rather. Okay. So spend a little bit of time on this here. Let me click on this so you guys can look at it for a minute. You're comparing revenue to expenses. If revenue is bigger, take revenue minus expense. Otherwise, put a zero in that cell. That's what that's saying. That's for net income. For net loss, is this expenses? Are they? They're not. Okay, so you don't make the computation, put a zero in, or if they are, you do the computation, right, of the expenses minus the revenue. Okay, that's your net loss. That's how you do worksheets. And the last piece of this is the balance sheet, and has a similar, there's some similar work here. Yeah, we're going to do this again. We're going to do it one more time, as if it wasn't enough to do it the first time. Now, see, when you're way over like this, you can do something like this. You can sort of come up here, and you can go to View, Panes, Freeze Panes, and what it does for you, it keeps all your labels here, right? And you can sort of say, equals, for the adjusted trial balance equals cash, equals supplies, prepaid, equipment. Okay, all that, okay, including drawings. Yeah, including drawings. Okay. And then you have to strategically look if there's an accumulated depreciation. There might be a receivables down here. Yeah, here you have a receivables here. All right. You have an interest payable here. If there's any payables or receivables, right, you're going to make sure you use those. Salary, wages payable. There's another one up here, accumulated depreciation. Okay, you have all that. All right. Yeah, you have an intermediate summation down here, so equal sum parenthesis. And you could just do this. Just one big fell swoop. That'll work. It's a little messy. I don't like that, but it'll work. Yeah. So yeah, they're a bit off. Yeah, they're a bit off. But like I said, the reason they're off is because you didn't account for the net income, which goes into the owner's capital account, which gets accounted for in the equity section of the balance sheet. So if you subtracted these two, you're going to get the 2860. Right? If you just come here and say equals this thing minus this, there's your 2060. Okay, but we have to do this. Yeah, we have to do it in a way where it's do it in the organized sort of accounting way. These. So now what you're going to do the same detail again. I'm going to show up here. These are net loss. So yeah, it says if expenses are bigger, if it's a loss, where do you put it? If it's a gain, where do you put it? Okay. So what you're saying is if expenses are bigger than revenue, you're going to put the loss in there. And looking at this one, it says if revenues are bigger than expenses, use the net income. Is what that says. And let's do this. Let's do this one first. Equals if parenthesis if revenue bigger than expenses, then use that income. Otherwise, zero. Right? Yeah. And then if expenses are bigger than revenue, use the loss. Otherwise, zero. Right, which that works for us. And what we should do here, put these in parentheses, is right there. Okay. Here, what we'll do, we'll go back to this 20,600. Yeah. Okay, so this is a loss here. And we did this something. Here, let me see. Let me see if it goes Control Z. Let me see if this works on this one. Yeah, it's the same math there. So I think I need to delve into the logic here a bit, because we had that loss, and if you subtracted this, where would that go? Kind of a thing. right? So you got to be careful with these. There's cash, capital. Interesting. That's like I said. That's I'm not gonna. I don't want to spend video time sort of pondering. It works for here. Yeah, it works for there, which is fine. That's interesting. So looking at these two, right? You took this, you add those up. Okay. Yeah, I got to work that. If it's like I said, I'm not going to spend video time working. It works for the net income situation. For the loss situation, why wouldn't that work? Yeah, maybe subtract from here or something like that. And like I said, we'll ponder that. But we're also this. What you're basically doing is for this particular situation. Now, I know the Watson one has a loss, so let's see what happened with the Watson one. Yeah, see with the Watson one, there's a loss here, and it worked. Oh, I see what we did. Okay. Yeah, you got to be careful. You got to be careful with your numbers here. So if this was, yeah, you're there. 11,600. Hmm. Yeah, this all works fine. And this one's gotta, it works here somehow. So how did this change? Cash. All right. Well, that's why we have another one. We'll go back. I know it's working for the Watson case there. So okay. Like I said, we'll work out the bugs in this. Yeah, you're always gonna hit the wall with something like that. Okay, we'll get back to that. But this is Control Z. Okay, this works. This does what it needs to do. And again, if we need to adjust this logic, we'll deal with it. Okay, save that. But you're good for this particular example. You're good because what it does, what you're basically trying to do is you're taking the net income and you're plugging it in there. Is what you're doing. You want to add to the credits to have your balance sheet balance, which makes sense because it's liabilities plus the equity piece, and the equity piece changed by 2008 60. So that's how these are going to match up, and they do. So there's no problem. This one is free and flow. Like I said, you start doing if this, if that, you start messing around with everything, and we'll spend some time. We'll figure out what happened with that. But we're good with this. So okay, so we did all these. So this is it for the worksheet. You have the balance sheet, you have the income statement, you have all the pieces here as you go along. And like I said, the logic down here, this is totally fine for here. This works for this one. Okay. This works for this one. Okay. So we have everything with all that, and we're in good shape with that. Oh, but I'm going to resolve. If there's any issues here, I'll resolve it. I may be sending you an email saying it's totally fine, which it probably is. Okay. Now you have to generate these documents too. You have the income statement, you have the equity statement, you have the balance sheet. Okay, you have all those pieces there. I'm looking here. I don't see. Yeah, and there's some questions here. And actually, what we should do, Alt View, W F F. So we unfroze the panes on that. I think we save what we just did, so we're unfreezing the panes. What you're going to want to do, I don't think I have cash flow in here, although because I don't really have the cash flows. But these next set of statements, you want to develop the income statement, you want to develop the equity statement, you want to develop the balance sheet, you want to develop all those things. We'll go back to the ledger in a bit, okay? But let's just start developing all of these. That's what you're going to do. You say equals, right? And now it's this is the beauty of this. You can just roll up to income statement and all the other pieces that you need with this. You can sort of roll up to them. and just sort of create them as you go along here. Yeah, we're not going to, Watson will work, we're going to work on that next. Okay, not this video. That's going to be another video. All right, so we're not going to worry about that today. But yeah, we're here with this, and then the next piece of this, you have supplies equals negative. Supplies expense is the 1,500, which is right there. Depreciation expense is right there, 40. Insurance expense, 50. Salary and wage expense, 5,200. Rent expense, 900. Interest expense, 50. Okay, I think that's all of them. Equals sum, all the expenses right there, and then you just come down to net income equals just these two added up. Your sum of expenses, your sum of service. Okay? It should be that same 2,860, which it is. The equity statement is next. Again, the dates, the label, all those types of things, all very important. You're going to start with 0. Okay, you're going to start with 0. And then you have an investment that comes in equals, like I said, you can go to the adjusted trial balance with this. Yeah, capital starts at 10,000. The net income is just simply, you just refer to the previous financial statement. This equals sum parenthesis right there. Right, this is just equal to those two. This equals this number plus the 0. Never underestimate a 0, that's for sure. And your drawing number is equals negative 500. Yeah, which is right there. And the new capital is that 500 plus the 12,860. So again, the new owner's capital is 12,360. Yeah, okay, which is in there. So all of this work that you did with the equity statement, all you do is you roll down here and you say this is just equal to that. After all that work, okay, it's just simply equal to that. And then the rest of this is just the balance sheet entries, which we'll do next. Yeah, these are here. So equipment is sort of over a bit, so equals. And like I said, now you can just go directly to balance sheet here. Equipment is 5,000, which is right there, equals negative depreciation. The accumulated piece is 40, it looks like. So yeah, it's 40, which is right there. That's a negative. And this equals the, and see here, this is the thing where you're spending, 5,000, and if you just listed this with the accumulated depreciation, if you just wrote down the equipment, it looked like you spent 4,960 instead of 5,000. That's why the FASB and all these folks decided that, so it shows the actual investments in the company, and and encourages investor confidence, encourages investor to invest capital in the company. This was cash. Receivables is next. Or simply the 200. Supplies is next. Only 1,000, right? You wrote that down a bit, and the prepaid is also written down. So whatever it is, 550, I think. Yeah. All right. So this equals some parenthesis, the equipment number, and then all those added up. That should be 21,910. Yeah, 21,910. Okay, and then obviously what you want here, this bottom one equals sum of your owner's capital and then your total liabilities piece. This equals just the sum of all of these. Again, we're going to enter those numbers in a second, and this is just this, the liabilities and the capital. Note payable is 5,000, right? Account payable 2,500. Unearned service revenue, was it 800? The unearned service revenue? I think so. Yeah. He did that. And then salary and wages payable. There's a couple of these. There's another one. There's interest payable also. Salary and wages payable, 1,200. And then interest payable, 50. Yes. And yeah, there you go. Okay, so we got all that. Okay, save. There you go. Like, we don't have cash flow because we don't have all the cash transactions broken down, but that's really what I wanted to show you guys today. We're going to close this thing out in a bit. Okay, we'll do that. Now, Watson here is the next one. The Watson is this has a loss, this problem. So I think it's better to we break these up into a couple of videos because, like I said, I want to go back and I want to work on the logic. It's good. Like I said, hey, you know, I've been doing this a long time, and I'm not infallible. You guys aren't infallible. You know, we always see things better and refine our logic a bit. Like I said, that the loss thing, I want to go back and figure out what exactly, if there was something wrong with my logic, which I don't think there is, but you know, but we'll work that out. That's not a problem. So yeah, so we're gonna get to the Watson example for the next video. You have the income statement here. We're gonna do post closing trial balance. We're gonna do that next, and the ledger. We left the ledger open here, and also we have these. I've stopped using these T accounts, but you know, we'll see. That maybe next. Before the Watson thing, maybe I'll run to this real quick. But what I do want to do is the ledger. Okay, so I do want to work through this. Yeah, so you're here with this thing. Yeah, I mean, I'm going to enter them 10,000. Like I said, but we can go through all this and we come up here easily. And you know, what was the initial investment in the company? You know, those kinds of things. Yeah. The idea of this is to figure out the owner's capital numbers. And we just did that here. Was it 12,360? Yeah, there's 12,360. So we're going to sort of repeat ourselves a bit. But that's okay. Okay, that's okay. 500 came out of this. And actually looking at this, what you should do, there's 500 here. Look at that. That's where that 500 comes from. So you see, this was a closing entry. That was a 500, which was right there. So yeah, you're on capital. Your initial number was 10. All right, now you're a J3. Let's make these things equal, right? Here's your 500 under capital, was right there. All right, and this thing equals capital here, 2,600 or 2,860, which is right there. Okay, so you have that. So this equals this thing plus this. Okay, and this equals that balance minus the 500. But there's owner's capital, which again, it matches what I did here, and also matches your statement that you just worked on. And again, these are from the closing entries. Okay, and this was your initial number. We don't have J1 here, that's why I'm not making it equal to that. But that's if we had it, we would just equated it to that. Or like I said, I could have just come up here. I could just got it from right there. That would have also worked. Okay, it's a little creativity with this. This next thing is drawings, 500. and this is equal to from J3 right there. Okay, so this equals this. This equals this minus that. So again, you zero out the, you don't just constantly count these withdrawals. Okay, so you have that thing. The summary here. This is the initial entry, 10.6. The next entry, 77.40, and then the final entry. Again, it's all income summary numbers. So this equals this one. This equals this minus that, and this equals that one. So yeah, so again, you want your income sum. You want this thing to zero out. Very important. Okay. And here, let's show you where everything came from. Okay. That's where these are all income summary. This is all from your closing. This is from your J3, your closing journal, which is right there. And again, we could pick this off. That was the initial 10,000, which was right there. J2 is the adjustment entries. There's J2, which is right here. What'd you do? 400 out of that? You did 400 there. Yeah. And then you did 200, which was here. Okay. So this is going to be equal to the 10,000. This equals to 10,000 plus the 400. We did that again there. And then here, again, you're closing out. There's your service revenue. Equals this minus that. Okay. There's your service revenue, which is there. This is your initial adjusting entry. This is your expense. J2. There's from J3. Okay. So this equals this. This equals this minus that. Again, I'm showing you how to close out. Right? And these from there. Depreciation. Oh, wow. Sorry about that, guys. Something, when we entered these, we're down, we went a notch down. That's 40. Yeah, and that's 40. Oh, sorry about that. Yeah, it's down a notch. J2, the initial time this was recognized, 40 closing, 40, right? This equals this thing, this equals this. Right, which are all those. Okay, insurance expense. Is 50. Then you're going to close out 50, right? This thing minus the 50. That's your insurance expense. You can see how we're doing this, right? We're just showing you how to close the books. And then we'll have a final post trial closing trial balance, post-closing trial balance. We'll have that next. These guys are, well, the initial was 4,000, right? And then from the journal equaled another 1,200 showed up. Okay. And then we had the closing entry for your total salary and wages, 52 equals this minus that. Okay. There's all that, salary and wage. Rent, oops, the initial one was 900 equals that. And then this is J1. And there we close that out. Both H and C equals this minus. Okay. And finally, we have interest expense. $50. It's the last one. There you go. Okay, and here, let's just show you guys where these all come from. That was interest expense. Okay, so here's on the here's J3, right? And that makes sense. Here's J2, okay, which is the adjusting entries. These are the closing entries. Okay, so you have all those. That's your ledger. Is that what you're supposed to do with this? You're supposed to build the balances from this. And actually looking at this, after doing this, we can build the post closing trial balance sheet, which we'll do next. This is Hancock. That's not it. There it is. Like I said, there's some other standalone problems that we're going to get to in a little bit. Okay, we'll deal with that. Here's post closing trial balance, which is right there. Where'd this come from? Yeah, this came from the adjusted. Yeah, this post closing trial balance. Yeah, that came from the. These are all from the adjusted. Okay, so we'll do that equals. There's 15,200. Which is there. Receivables. There's 200. Yeah, that's that one. This is prepaid. Pardon me, this is supplies. What's left in supplies? 1,000, I hope. 1,000. There's prepaid is next. The third one, 550. Equipment, 5,000. There's 40 on this. There's 40 notes payable. Thousand accounts payable 25. Right, accounts payable 25, which is right there. Yep, accounts payable 2,500. Unearned service revenues 800. Salary and wage 12. And these models are so small, you could just look for those numbers too. I mean, be careful working like that, but you could look for, yeah, there's your 1,200. Just make sure. Yeah, salary wage is that one. Okay. Interest is 50. And now you got to be careful at this point. This is a true, a pothole in the road, so to speak. There's your 50. I hope. Yeah, that's middle. Yeah, this next one, and this is where you could really go wrong. This one came, yeah, this comes from your equity statement. Okay, that you already computed. Okay, so it's here. So that includes the net income and all these other pieces to it. You can take this whole thing, all N, and you're gonna skip equals some parenthesis. There it is. Yep. Oh, make this a little bigger. Yep, we're good. Match. Okay, that's a lot of work today. All right, so there you go. So that's your post-closing trial balance. That looks like, I want to see if there's anything else that I didn't talk about. Yeah, there's a lot of notes in here. You guys can read through the notes on your own. This C. Baxter Hoffman's, these Hancock, these are just some standalone problems. We'll get to that sort of next time. All right, just let you guys sort of absorb everything here. A temporary account relates only given accounting period, revenues, expenses. Permanent, so like cash, and if you have whatever $1 million in the bank, and next month it doesn't go to zero, you'd be pretty upset if that happened. That's permanent accounts are ones where they don't change, they don't get zeroed out. But where your earnings, you're going to zero every month, even though you drop it into your bank account, but you're going to zero out those earnings as you go along. Okay. So yeah, there's some T accounts here. We can work on those. So there'll be another video on this that will talk about Watson. And folks, like I said, I apologize. I hate to come to video and all of a sudden I'm sort of stumbling over something. But down here, like I said, I'm going to work on that little logic on the balance sheet and see if there's anything that I didn't explain the right way or whatever it may be. There's some self-test questions. Read through these, try to answer some of these. I may give you something like this too, especially with the accounting stuff, because the accounting, the way the teaching is explained in the accounting, but what is it? The pedagogy or something like that. That's the teaching word for it. It's pretty good. Okay, there's self-test questions, brief exercises, all those kinds of things. So certainly you guys want to go back and deal with that. Okay, but like I said, the next video will be on Watson. So read the chapter, watch the videos, take the Excel, go line by line, try to understand what we did here. This is a lot of material in whatever, an hour and a half of video or whatever this may be. And like I said, I'll go back and try to tweak that little line at the end. But I think we pretty much have everything. Okay, so I spent some time on this, and I'll be talking to you soon. Okay, all right, folks, please get to work, watch the videos, do the Excel, email me as much as you need to, and I'll talk to you.